Appreciate everybody joining us today, and then definitely appreciate the opportunity to share with you some of the historical research that I've done at the Kansas City Fed. If you've heard me talk previously, I'm going to talk a little bit about some of the issues I have discussed in other presentations, and then also talk about a few some new things as well related to my most recent work. So with that, let's see if I can share this screen. Hopefully you are seeing the first slide of my presentation. So we're talking about the history of Black banks in the United States. And for a lot of people, when I give a lot of or many presentations and we talk about the history of Black-owned banks, some people say, well, I know about the first Black-owned bank in the United States. That was the Freedman Savings Bank. The Freedman's Bank, I guess here's I don't know, the facts about the Freedman's Bank. It was not a Black-owned bank. It was not a Black bank in the way that we would think of such an institution today. So for those unfamiliar with the Freedman's story, the Freedman's Bank was a government created bank in the aftermath of the Civil War. So after the war ended, there were a couple initiatives that were launched to try and help formerly enslaved individuals in the South. And so one of those was the creation of the Freedmen's Bureau. So the Freedmen's Bureau did a lot of things, providing aid to individuals and families across the South. It also did things like reuniting families and put some legal formal structure around marriages. At the same time that the Freedmen's Bureau was being discussed and Congress was putting it together, there was a separate initiative that created the Freedmen's Savings Bank. And so it was created by some individuals who saw that there was some money left over after the Civil War, money that had been paid to Black soldiers who had fought on behalf of the Union. The government had kept their money in a bank account, basically a government account for them. And then that money was not claimed after the war. So that meant either the individual soldiers died or they didn't provide a forwarding address. So they had these funds left over, and there were some folks who said, hey, we can use these to create a bank that we can begin to serve these communities. And so that led to the creation of the Freedmen's Savings Bank. It was very hastily drawn up legislation, and it sort of piggybacked on the Freedmen's Bureau legislation. A lot of people, even at the time, weren't clear that these were two distinct entities. There was a lot of confusion about it. You can see there that they used an image of Abe Lincoln and some of the Union generals to promote the institution. Freedmen's Savings Bank opened branches across the South, but it was a government-created institution that operated under the leadership primarily of Henry Cooke. The Cooke family were wealthy Wall Street investors. And so a lot of people thought that was a good thing, that they had some experienced investors at the hand leading the bank. But what ended up happening is the bank failed. It was drug into failure by the Cookes and some mismanagement of their own finances. They basically put their bad assets into the Freedmen's Bank accounts. And so it led to its failure in 1874. There were about 61,000 depositors at the time that Freedmen's failed, lost about $3 million at that time. Depositors, the most any of them recovered was 60 cents on the dollar. That was only after a process that extended for many years. Most depositors got somewhere around 30 cents on the dollar. Many depositors got nothing. Recognize that many of these depositors were formerly enslaved individuals, and they were had been able in some instances to maybe hire out their time on weekends with having to turn over a portion of what they were paid to the slaveholders, so they would keep only a small portion of that. So we're talking accounts of only a few dollars earned across a lifetime. Is very tragic that even that small amount was wiped out. That Freedmen's Savings Bank building pictured there, that was actually located diagonal across the street from the White House. There's actually a Treasury office building in that location now. So the Freedmen's Bank failure was viewed by many in the public as a failure of Black banking. And one of the reasons for that was, as the failure became imminent, Frederick Douglass was brought in to try and save the institution, and it was far too late at that time. And so many people looked at that and said this was a failure of Black banking, and that's just simply not true. But you can read that even still today, unfortunately. And so after the Freedmen's Bank failure, and then after the failure of Reconstruction across the South, we actually then finally begin to see the rise of the first Black banks in the United States. So the idea of creating a truly Black-owned, operated bank for the African American community actually dates back to the early 1850s, in fact. But it was an idea that was unable to gain much traction. So there were supporters in the North who thought, if we create this bank, we're going to create economic opportunity within the Black community, and we're also going to be creating something that's very strong symbolically. But they couldn't really get that effort off the ground, in large part because the same individuals who were interested in creating the bank were the same people who were fighting for the abolition of slavery. They were heavily involved in the abolitionist press. They were heavily involved in the Underground Railroad. So the idea of a bank sort of had to take a back seat to a lot of those other more important priorities. But so in 1888, you see the creation or the chartering of the first Black bank in the United States, the Savings Bank of the Grand Fountain United Order of True Reformers in Richmond. And to explain that name a little bit, the True Reformers were a fraternal organization that had chapters located across the South, what they refer to as a local chapter as a fountain. And what had happened is, well, first I should explain how they function. So they function sort of as a rudimentary insurance provider. And so within the organization, within a local chapter or fountain, members would contribute their funds, they'd pay their dues, and then that dues money would be held until a time when a member had some type of financial need or emergency. So most often this was going to be a significant illness or a death in the family, and then those funds would be allocated to that individual or their heirs at a time of need. That was the basic function of the organization. But what happened is there was a chapter near Richmond that had been unable to safely store its funds. So it had tried to work with a white storekeeper to keep that money. But there had been some concern about the risk of violence within the community. And so they reached out to a gentleman named William Washington Brown, who was the founder of the True Reformers, and said, we can't continue. We're at significant physical risk here because we've got this amount of money. And Brown traveled to the group and met with them and returned to an idea that he had actually thought about previously when he was in Alabama earlier in his life about creating a Black-owned bank. And he saw this as an opportunity to do that. And so the funds from that chapter, as well as the other chapters, were consolidated together to create a bank. And it was the Fountains or the True Reformers bank, but it did things like lend to the community. So it engaged in a banking business that became really the heart of a vibrant economy. Richmond, Virginia, eventually after the founding of the True Reformers Bank, there's going to be 4 other Black-owned banks created in Richmond, and they're going to be the catalyst for growth for an area called Jackson Ward, which was a very vibrant community, any number of businesses. It was renowned for nationwide for its entertainment, a very strong and impressive community there in Richmond. Capital Savings Bank was chartered shortly after the True Reformers Bank. It was in Washington, D.C., created by a couple men named Milton Holland and Leonard Bailey. And they had chartered that bank because they were concerned about the further restriction of civil rights on the Black community in Washington, D.C. And they had been involved with another financial organization, and they believed that if they created a bank, it would help the community and provide some protection as civil rights were eroded. The idea being that as you take in deposits, you can lend that money out, and that money can be used to fund businesses and provide a vibrant Black economy if conditions were going to turn for the worse. So that was the catalyst in its creation. And then finally, the third of Black bank created in the United States was the Alabama Penny Savings Bank in Birmingham, Alabama. It was created by Reverend William Pettiford there in Birmingham, and he had noticed that there was a large Black workforce in Birmingham at that time engaged in industry. But in the segregated economy, there was nowhere for those workers to save their money. And he felt like there was really a missed opportunity there, that if there was a bank that could take in deposits and then lend that out, that there could be even more significant economic growth. And so that led him, was one of the key reasons that he created Alabama Penny Savings Bank in Birmingham. Now, all 3 of these first banks and really the beginning of Black banking in the United States were exceptional when they were compared against their peers of that late 19th century era in 3 significant ways. And I hope the first has already come through to you, the vision that they had. They were created to be more than a bank. So no one engaged in banking with these institutions for financial reasons. It was about community service. They were particularly innovative in serving their communities, and they were very resilient at a time of financial instability in the United States. They were able to withstand some significant financial crises. And so, as we talked about that vision of being more than a bank, you can see the quote there from William Pettiford at Alabama Penny Savings: "We make the matters incidental instead of making it the main object." So a particular incident that really struck Pettiford around the time he created the bank was a story about two children whose parents had died. The parents actually had some money, but they were unable to pass that money along to the children because no one in the extended family could post a bond. They would need access to a bank to be able to post the bond necessary to receive those funds. And so it was things like that that Pettiford had in mind when he created Alabama Penny Savings, and that same community leadership spirit was in all three of these institutions and would continue to be in Black-owned banks at the heart of them going forward. Innovation among the earliest banks, and again, this is something that you will see across the history of Black-owned banking, recognizing the need to serve the community. And so at the first banks, some of that innovation meant changing the way mortgages were handled at that time. And so they would lend with a longer repayment schedule and lower interest rates to allow people to afford homes. They had programs to encourage small depositors in particular. So there was a bank created soon after these first banks in Richmond called the Nickel Savings Bank. And the way the Nickel Savings Bank worked is it gave its depositors a small nickel-plated bank in which they could put coins, and the bank was actually locked, and the key stayed at the Nickel Savings Bank location. And so the idea was that you would come in every few months with the coins that you had in this bank, and they would unlock it and they would deposit it in an account for you. So the idea was to bring in even small depositors of limited means to encourage them to begin saving to establish a banking relationship. They operated outside of normal, what we would call bankers' hours, because they recognized that their depositors were unable to visit the bank during normal business hours. And they also created special programs for the unemployed. So if someone lost a job, the bank would have a special program to provide them with funds, make them low interest loans to be able to help them get through difficult times. And finally, as I mentioned, these banks were particularly resilient. So if you look at America's economic history in the late 1800s, you basically are in a continuing financial crisis from about 1875 on. And this was a period where you saw about 500 bank failures nationwide. You had 18% unemployment. Many banks similar to size of these first three banks would have lasted about 7 years, if that. So banking was a much different entity in those days in terms of stability. And so banks would come and go. These first three banks had an average lifespan of 20 years. And I think this really speaks to the vision of the leadership, their engagement in their community, their understanding of their business, their aversion to taking on excessive risk. It was really commendable. One of the banks, the bank in Richmond, actually provided financial services to the local school district during a time of financial difficulty when the white banks were unable to provide that service. So I think that really speaks to the quality of the banks, the policies they followed, and the individuals who led those efforts. And so those first three banks really create the beginning of an era that leads to the creation of at least 60 Black banks across the United States by the time of the Great Depression. So that number 60 is probably a little low. There's sort of a joke during this period, as I talked about, you had different regulatory environment. And so to create a bank at this time in the United States, you could simply paint the word bank on your window and you were a bank. And so if people were willing to trust you with money and felt you offered a good deal as far as lending, then you were in the banking business. And so it's very likely that there were 100 or more Black-owned banks operating in the United States by the time of the Great Depression. And from that base in Richmond, Virginia, they expand into places like Oklahoma, which I will talk about here momentarily, as well as into places in the upper Midwest as we see increasing industrialization and the Great Migration. So that's going to be places like Chicago, Philadelphia, Detroit, all begin to see the expansion of Black-owned banking out of the South into the northern US as population moves that way. One of the more interesting stories, and as I work at the Federal Reserve Bank of Kansas City, a story that is very near and dear to us because this is part of our Federal Reserve District, is the story of Boley, Oklahoma. This is something a lot of people don't know. I think even if you grew up in Oklahoma, you may not know the story of Boley. But in the era after the Civil War, and in particular after the failure of Reconstruction, there was a significant migration of Black individuals and families out of the former Confederate states and into the American plains. So you obviously had people moving north in search of a better life and economic opportunity, but you had a number of individuals head west into the open spaces of the plains with the idea of creating Black-owned or Black-controlled communities. This is actually an idea that had been debated for some time predating the Civil War among both Black and white civic leaders, the idea of creating some Black communities or Black territory in the United States. Some people favored the idea, both Black and white individuals. Others opposed the idea, both Black and white individuals, and the arguments on both sides of that reflected the idea of, why should you have to go somewhere and create a community? Some saw it as a great opportunity. Others felt like we should be able to create these communities. We should be able to live peacefully in the United States and establish towns and communities. Regardless of the debate, this was something that happened. There were about 50 Black-owned towns in the United States that were created. This was more than any other state. There were some in Kansas, there were a few in Nebraska, there were some in the plains in Oklahoma or Colorado, but many were created in Oklahoma. Some of that obviously has to do with proximity, and it also has to do with some of the territorial laws and land ownership laws in place in Oklahoma before it gained statehood in 1907. And one of the key communities, perhaps the best well-known, was Boley, which was founded in 1903. Here you have a picture of Pecan Street in Boley. This is Boley's Main Street. This is a very vibrant community that was created, and soon after it was created, Booker T. Washington and the National Negro Business League began to pay the community visits. They were actually there a couple times and actually held a meeting there in Boley, and it really became a very strong place symbolically for what it was able to accomplish. And at the heart of growing Boley was DJ Turner and the Farmers and Merchants Bank. So shortly after Boley was established, Turner led the creation of the bank. And so Farmers and Merchants is what I sort of think of as a new kind of bank compared to the other Black banks in existence in that time. And that many of the other banks were linked either with a church or a fraternal organization, as the true reformers were. Farmers and Merchants was a bank formed in conjunction with the forming of the community, and it was reliant on that community for its success. So it didn't have, an outside source of wealth or stability to be able to lend it or to be able to help it along as it became established. It opened with $500 in capital, and it became a driving force for the development of Boley. You can see the quote there about DJ Turner and how important he was in the growth of that community. Turner, if you've heard of Boley and you've heard of DJ Turner, it was actually probably from a horrible incident where his bank was robbed, and it ended up in an actual shooting in the street. Turner was killed, and it was a major gunfight. And sometimes that story, the whole community responded to the bank robbery. That story gets attention about every 5 to 7 years of varying degrees, either in the local Oklahoma press or nationwide. So if you've heard of Boley, that's probably why. But Boley really was an economic hub for an entire region. And this Masonic temple in Boley was one of the largest buildings in Oklahoma at the time it was constructed. This building was completed in 1915. By 1920, Boley was home to 82 businesses, and you can see they run the gambit of all types. It's interesting that Boley's actual population was probably only a couple thousand at its height, but as a regional hub in eastern Oklahoma, it served a largely agricultural population base. And so people would travel to Boley on a Friday and Saturday night. And so if you go back and read anecdotal accounts from those days, you'll talk about all sorts of activities and thousands of people in town. So people often estimated its population at much larger than it was because it was so important to serving a large economic region. Over time, as it continues to grow, you have the founding of the First National Bank of Boley, and this is the first Black-owned bank in the United States with a national charter. That picture there is actually their Federal Reserve stock certificate, so that is something as a national bank that they would have. First National Bank of Boley, again, very important to the community in the 1920s when the cotton market collapsed. This bank was at the heart of stabilizing the community and helping it through some very difficult times. As it would turn out, actually, Boley, though eventually could not survive all the agricultural difficulty, in the collapse of agricultural markets, the increasing industrialization and jobs to the north, Boley's inability to attract a year-round employer in the form of a major manufacturer was really key to its ability to survive, and they were unsuccessful in being able to develop that. And so that led to Boley's, I wouldn't say its demise, but it began to dwindle then over time as it became easier to travel elsewhere and its young people could find better jobs in other communities. Certainly one of the communities near Boley that people are more aware of the history today than they were even a few years ago is Tulsa and the very vibrant Black community of Greenwood within Tulsa. This interesting, certainly to me when I did my research, and it's interesting to others that there were no Black banks in Greenwood, and that's probably surprising because the Greenwood neighborhood, if you don't know of it by its name Greenwood, you probably know it as Black Wall Street. And there were other types of financial services firms there, but why were there no Black banks? Well, excuse me if you can hear my phone. Let me turn the ringer off there. There were no Black-owned banks because historically in the United States, banks developed in situations where people have had little access to capital. So they were not developed out of a need. They were not developed out of an abundance of wealth, but out of an abundance of need. And so individuals with limited means would come together and put their money, deposit their money in a bank, and then lend that money back out to help the community grow. In Tulsa, you had a very different situation. You had an oil economy that made even traditionally low-paying jobs comparatively very well paid. And so you had wealth in Tulsa. You also had a community that was developed primarily through a couple individuals, J.B. Stratford and O.W. Gurley. They had acquired the land prior to and around the time of the oil boom. And so they functioned as private lenders. And so basically what they did is they had the land and then they would loan to people, help them acquire the land, help them build homes on that land and develop businesses. There were other private lenders also in Tulsa. And so that's how that community grew. It is interesting that after the tragic events of 1921, when the community was destroyed in the racial violence there, people nationwide actually sent their money to the bank in Boley, Oklahoma, and the bank in Boley, Oklahoma administered those funds to the community in Tulsa because there was no Black-owned bank there. And so I talked about the growth in banking prior to the Depression, and then the Depression was absolutely devastating on the community. And so by the time you get to 1933, there are only 8 Black-owned banks in the United States. And it's very difficult for the community to recover. The African-American community was hit particularly hard by the Great Depression. And so it's not until the dawning of the Civil Rights era that you begin to see a rebound in the number of financial institutions. And so during that era, you're going to see banks formed in Kansas City, Detroit, Memphis, Chicago, other places as well, Washington, D.C., Philadelphia, places in the Northeast. One of the most prominent banks formed in this era, and actually the first Black bank formed in the United States since the Great Depression, was Tri-State Bank in Memphis, which opened in 1946. The bank was founded by Joseph Walker, who you see pictured there on the right. Joseph Walker was actually a doctor who had worked in Mississippi. And there he became friends with the owners and operators of a Delta Savings Bank there in Mississippi. And they eventually convinced him that they wanted him to become involved in banking. And so he did. He moved to Memphis and became involved in the insurance business there, and then returned to banking after his son had been denied a small loan by a white-owned bank in Memphis. One of Joseph Walker's key hires was Jesse Turner, who you see there accepting a check from a local organization, pictured on the left. Jesse Turner was at the bank's helm for a number of years during the civil rights era, was a local leader in the NAACP. Jesse Turner was actually involved in a couple of key lawsuits that led to the expansion of civil rights and eliminated restrictions in some public areas. The bank was particularly important. One of its noteworthy accomplishments was its role in an economic freeze in 1955. So after the Brown versus Board of Education ruling, there was an economic freeze in parts of Mississippi where white-owned banks basically called in the loans of Black borrowers, closed their accounts, foreclosed on some of those borrowers and took their property. And so Tri-State Bank led an initiative where it loaned money into Mississippi to try and help individuals and families during that very difficult time. You can see the quote there about the Walkers and their work at the bank. So during the civil rights era, they would help loan money to individuals or help individuals get bailed out of jail, for example, if they've been arrested during a protest. The bank was a home to any number of civil rights meetings that they used their public space for individuals and groups who could gather and could talk about the next step in the fight for civil rights. It's a very important institution in the history of civil rights. It was actually only recently acquired by Liberty Bank out of New Orleans, which an institution that some people may be familiar with. And so after the civil rights era, you're going to see a continuing growth in banks into the 1970s. You have about 50 in the United States. And then we begin a downward cycle as we see the banks struggle against financial crisis in the 1980s. In the 2000s, there's going to still be around 50 institutions at the turn of the century, but they're going to be hard hit again by financial crisis of the housing bubble of 2007 and 2008, one of the more significant events. Eventually today, this is going to leave us with about the 18 Black-owned banks that we have today. And so when we talk about Black-owned banks, I think it's important for people to understand really how important these institutions are, because sometimes people say, well, you don't have the segregated environment that you had in much of this history that I've been talking about. But it's important to understand that minority-owned depository institutions of all types, so that's going to be Asian American banks, Native American banks, Hispanic American banks, in addition to African American banks, are more likely to be created in minority neighborhoods and communities. And they're going to be a key source of banking and financial services for that community. So proximity remains important. And we know that even as much as people do online banking or app-based financial services, the number one reason that they choose a particular bank is because it's in their neighborhood. We know that non-local lenders and online lenders have increased their business lending share, but local branches still continue to be a primary credit source. And so it's important that banks are in communities providing access to those services. We also know that when a minority-owned depository institution closes, it is unlikely that another bank is going to step into that area. So if a branch goes away in a predominantly minority neighborhood, it is unlikely to be replaced by the branch of a competing bank. It is more likely that that community is going to be home to an alternative financial services provider who's going to go in there, and this is a firm like a payday loan, title lender, check cashing place, one of these places that charges an exploitive rate of interest. They are more likely to locate in minority communities. You can read the research about that, or as I always say, you can drive around your own community and notice where those businesses are located. One of the bullet points on here that I think is a particularly interesting issue is about the issue of cultural proximity. There was a study, it was actually done out of India, and I think it really demands for increasing research here in the United States and should get more attention. But the original study was based on cultural proximity, where it looked at how closely were bank managers and the local community related culturally, and what did that lead to? What kind of outcomes did that have? And they found in places where bank employees, bank management, bank staff were more closely aligned culturally with the local population, that the bank did better. It loaned more money than other banks. Loans were repaid more promptly than in other situations. It was better for everybody. And I think that's some important research, and I hope it'll get some increasing attention. And then finally, just to sort of reiterate some points within minority communities, minority banks fill a crucial need. They serve a higher share of mortgage borrowers. They do more with small business loans. They do more with entrepreneurs. They are far more engaged in their local communities in ways that I think this history shows they go beyond the provision of financial services. And so through my research, I think there's some things that we have to think about sort of going forward. And some of these issues relate to banks and their size and their ability to expand economic opportunity. Most minority-owned depository institutions of all types are small banks. They can do a lot for a community, but how do we think about sort of broader economic uplift and what does that look like? There are a number of mission-driven lenders that are out there, and CDFIs, if you're not familiar with CDFIs, these are institutions that go out and target lending in areas in need, and because of their structure, they are able to make loans in ways that banks currently cannot, and many are doing very good work. Their numbers have been increasing across the United States. We talked about the issues of community leadership that banks provide, and so as you think about the movement towards online banking, I think can have benefits to the individual depositor and perhaps even the individual borrower. But banks also provide a sort of intangible service, I think, in their community in the role of community leadership. And I continue to believe bricks and mortar structures in communities, bankers in communities are really extremely valuable, especially as we see the number of these institutions dwindle. It becomes increasingly concerning. And then finally, and maybe even most importantly, is how do we address diversity within the banking sector? And so how do all of us in the banking sector, including me and my counterparts at the Federal Reserve, what can we do to bring a more diverse employee base into the banking business? And I think beyond diversity, I think we also need to look at the motivations of the individuals who we bring into banking. And so maybe instead of going out and hiring, people who have the highest financial skills, we find ways to bring into banking individuals who are motivated by a spirit of public service and community improvement, bring them into banking, and then teach them the skills of banking and use the things that motivate them to be able to help the community and their engagement in the community. How do we bring people like that into banking and help them understand that, what a bank really is and what it can be in terms of serving a community? And so finally, I'll just conclude. The book on the left is the one we've published most recently at the Kansas City Fed. And it explores the history moving across time of some different communities. If you're interested in that book, the book on the right also looks at the first 3 Black-owned banks. Both of these are available online free of charge at kansascityfed.org. You can go out and get the PDF and read it electronically. Or you can order a hard copy and we will be happy to send it to you. The quote from A Great Moral and Social Force there from the Houston Post actually reflects back to the story I told earlier about the orphans that had been abandoned and didn't have money. And the writer pointed out the important work that a bank can do as a great moral and social force as it helps families. And I felt that quote worked well for the title of the book because it really summed up the vision and mission of many banks, sort of beyond the financial and the important role that they play. And so with that, Aaron, I'm going to welcome you back into the event, and I'm going to take a little drink of water, and I'm going to try and stop sharing these slides also.
Perfect. Well, thank you for that presentation. That was great, a really great overview, and we've got a lot of questions that have come in. So just a quick reminder, if you have a question, feel free to submit it using the Q&A icon at the bottom of your screen. We'll try to get to as many as we can. One question I did want to ask, going back to Freedman's bank, do you see the failure of that bank as the start of a lack of trust in the banking system by people of color?
So yeah, the short answer is yes. And a lot of people point to that. I think one of the things, though, that we tried to show here is that there had been a narrative out there, even until a few years ago, that many said, after this, there was never really a history of Black involvement in financial services. And so this we engaged in this history to refute that argument and just show that is not going to be the case. I think Freedman's is the beginning of something that we, again, speaking only, for myself, but what I've learned through studying history and what I think anyone will see through studying history. Freedman's began something that we have seen time and again as it relates to financial services. And I think one, need to only know the history of what happened with the housing bubble. Black homeowners were hit disproportionately hard in 2007 and 2008. And if you look at things that happened with subprime mortgages and adjustable rate mortgages and some of the things around that period, it starts with Freedman's Bank, and there's a number of other examples across history.
With some of these initial banks, how did the founders come up with the money? You mentioned, starting it with $500, but that used to be a lot of money.
Right. So some of them, they had organizations that they could fall back on. So the True Reformers was able to use the organization's money. Others were people who had been maybe successful in another line of business. So you have the South Side of Chicago. Jesse Binga was probably the most prominent Black banker, certainly of the early 1900s. And he had success in other businesses, including real estate. And he used that, basically staked his own fortune out there to develop a bank. And one thing, when I talk about Jesse Binga, I should also note that, keep in mind that many of these individuals, and I didn't talk about it during my presentation, but did this at significant risk. And I'm not talking only financial risk, but significant physical risk as very prominent individuals at a time in instances of racial tension. They were frequently targets of violence. Jesse Binga's home was bombed about 5 times, I think, on the south side of Chicago. And people asked him why he didn't move or go somewhere else because he had the financial wherewithal that he certainly could have gone anywhere he wanted. But he made a comment along the lines that if they can force Jesse Binga to move out of the community, they can force anyone out of the community. And so he wasn't going to go anywhere. And we didn't talk about it during the presentation, but I think that's a very important part of the story, that many of these individuals were not only engaged in their communities, their actions and their willingness to assume that risk is heroic in many cases.
Yeah, good for him for standing his ground and staying in his community. It feels pretty intense to have those threats made against you.
Right, exactly.
As you were doing research for these books and just the history on Black banks in the US, have there been any interesting original documents that you've come across or anything that was worth noting?
So, there's definitely a lot of interesting things that we came across. And I guess I should point out that, what really motivated, another reason that motivated us to do this history is when we realized that this is a story, and these are stories that had not been told, and that there wasn't really a place where all this information was. You would get a piece of a story from a newspaper article here, or maybe from a journal or something there, and sort of trying to bring this all together and learn these stories. I think every one of these individuals that we write about is worthy of their own book in their own right. As far as you look at their lives, vast majority did not come from banking backgrounds. They came from other backgrounds. They came into banking for that community service motivation. They kind of learned on the job in some cases, and so they were required to be innovative, both as they learned about banking and then as they recognized how to serve their community and succeed at that. So there's so many stories of the ways that they figured that out. Even relatively recently, you had Don Davis, who was a music producer in Detroit, who had wild success in the music industry, and then he became engaged in banking later in his life and did some important things in Detroit. So lots of good stories out there.
Moving more to present day, there's been quite a few questions of how do you find minority-owned banks in the U.S. now? Is there a list, and what is the largest one currently?
Yeah, so you can go out and Google, minority-owned depository institutions. Probably the best way to do that is the FDIC has a database that you can go to, and it's just the MDI database, and you can get a list of Black-owned banks or any type of minority-owned depository institution. And then as you can go through there, you can click on the bank, you can see where they have branch offices at and all those types of things. As far as size, I will tell you that all of the Black-owned banks are small banks. So if you combine the assets of all 18 of them into a single bank, that would still just qualify under banking regulation as a community bank. So they would have less than $10 billion in assets. So many of them are these are small banks. Some other types of MDIs are larger. Asian American MDIs are larger. Primarily, I think that's a function of the immigration of wealth out of Asia into the United States that we've seen going on for a few decades now. And you've seen wealthy individuals acquire banks, and then you've also seen those banks grow with a customer base that has significant wealth.
Are there any initiatives out there to really increase the amount of Black-owned banks that exist?
So, I mean, you hear people talk about it. I think the initiatives that have happened so far have been, you've seen some drives to increase deposits in those banks that can help them increase their lending, because those deposits are the fuel for lending. You've seen some innovation towards online banking. Some of the online initiatives that maybe call themselves banks aren't truly banks, though, and that they may be limited, may not be able to take deposits, or if they take deposits, they don't have that lending function. So there's some innovation going on online. I'm still not quite sure how I think that's going to turn out.
I still see some more questions coming through, so I'm just
no problem
scanning through them. Question about Douglas State Bank of Kansas City. Do you know much about that?
Yeah. So Henry Sewing founded Douglas State Bank in Kansas City, Kansas. It was founded right after Tri-State Bank in Memphis. And so he created the bank in Kansas City, Kansas. I've actually got some stuff related to him, and when I find some time, I want to pursue that further and maybe produce a paper at least on his life and his experiences. His bank has since been acquired by Liberty Bank out of New Orleans, and they continue to operate that branch and a branch on the Missouri side here in the Kansas City metro area.
I just had a question about Greenwood. We were talking about they didn't have any Black banks at the time, right? So were they all non-Black banks, white-owned banks? Do they have any banks?
No, so they didn't have banks in Greenwood. They had the private lenders, but some of those private lenders had relationships with some of the city's white-owned banks. So they would, sort of act, I guess, as a little bit of an intermediary that way. But most of the financial services activity in Greenwood was handled by private lenders. I should say that early on, the race environment in Tulsa was different than what it would become. And so some people there, regardless of race, did have access to the other established banks in that community for a time.
Okay. And then looking at the Community Reinvestment Act, I mean, that was created 40 plus years ago. Did that have an impact on Black-owned banks, either positively or negatively?
I think that's so complex that I haven't really sort of looked into that. There's been so many policies. There actually still is a policy designed to encourage government deposits in minority-owned depository institutions. There's been any number of initiatives, and I think it's hard to sort of wade out and see what difference some of those things have made over time. I think that I sort of just come back to more needs to be done for the communities, and how can we all of us sort of work together to accomplish that.
Do you think there's a role that maybe larger banks could play?
So that's one of the things that kind of became an issue, especially in the 70s. A lot of people talked about that, is how do you bring big banks in, recognizing that most minority banks are small, can make a difference in a community. But as you think broadly across society, can you bring big banks in a more aggressive way to lend to minority borrowers, and sort of how do you do that? How do you encourage that? And I think that continues to be something of a question even today.
Mhm. And it sounds like, I mean, this is a topic that a lot of people are talking about. Maybe, with more knowledge of the history and more of these conversations, that's a direction.
I mean, that's certainly what we hope to accomplish is
Yeah.
by bringing more attention to this issue and actively engaging with the topic. Hopefully we can bring more people into it, because it is going to take, it's a big effort. And it's, a fight that an individual bank can take on one customer at a time, but we need to do something faster than that.
Well, I do want to ask you one more question. You've been a wealth of knowledge today on the history of Black banks in the U.S. and just curious, how did you get into this line of research, and what's your passion behind it?
So my interest in this relates or dates back to, I do historical research for the Kansas City Fed and have over the years done primarily research related on financial crisis, structure of the banking system, Federal Reserve policy. And over the years, I would encounter small items about Black banks. And so one of the items I read talked about William Washington Brown in Richmond, who created the True Reformers Bank. And it talked about the risk he took on. It was a very small item that sort of profiled him as a banker. And in that article, it mentioned that as a child, he was known to be fearless to the point he often played with snakes. And I read that line, and I thought it really described well the environment he was in as a Black man creating a Black-owned bank in the city that was the former home of the capital of the Confederacy. He was very much surrounded by snakes, and he was very much in a dangerous situation. And that line really spoke to me, and it really made me want to learn a lot more about these banks, about him in particular, and about his peers. And so I went online and just wanting to learn more, and I went to Amazon. I thought I'll order a book and I'll start reading it on vacation or whatever. And there was no book out there, and there was no history out there, and that I wanted to learn more. And I thought that if I want to learn more, probably other people want to learn more too. And so that sort of set me sail on writing the first book that we published in 2019. And then people responded to that very strongly and wanted more of that history. And so we returned and did the more recent one. So that's really what motivates me, my drive to continue to work in this area.
Well, I'm glad you decided to go down that path. This has been great. I really appreciate you sharing your time and your knowledge on the history. We've got the link to both those books that you mentioned in the chat, and I'll also make sure we share it with registered attendees here. I'm going to go ahead and wrap up, and just real quick, again, thank you for your time. And we're going to drop a link to a short survey in the chat. If you could please take that and just let us know how you thought today's content was. It's really helpful as we look to host more of these banking and the economy webinars. We will also send the survey in an email next week, along with a recording from the session today. And I think that's it. So thank you again for joining us. Thank you, Tim, for your time. And on behalf of the Federal Reserve Bank of Kansas City, have a great afternoon.